Hey everybody, it's Jay and Ellie Love with the J&E Lunsford group. Today we just wanted to bring you some market updates, what's out there in the industry, particularly related to mortgages. And we have our featured guest today, Mr. Cody.grizzoffi with NRL Mortgage. He's a branch manager. He's going to bring us some valuable stuff to you guys and just tell us what's happening with the latest industry news. So Cody, take it away.
Hello, everybody. Again, my name is Cody.Grizzoffi with NRL Mortgage. I have been in the mortgage industry for a little over 17 years now, so I have been through the ups and downs, including the financial crash, and of course, what we're all going through now, which is something none of us have ever dealt with in our lifetime. So there's a lot of changes and, a lot of things that are not too much different that we just want to kind of discuss with everybody to let them know what to expect during this process of purchasing or refinancing a house.
Well, thank you for joining us, Cody. We appreciate you taking time out of your busy schedule to meet with us. What, obviously with everything that's been going on with COVID-19 and in the industry now, what is it that you're seeing different and maybe changes in the market?
So the biggest thing that is really playing a role in the mortgage industry is certain investors are kind of tightening up and cutting back because there's so much uncertainty within the world as a whole of what's going on with job stability, the market in general. One thing that we've noticed throughout the entire industry is that the jumbo investors a lot of them have actually come out of the market for a while, stepped back. Some of them that are still around, the rates are a little bit not as attractive as they were before the COVID-19. Non-QM loans, which is the non-traditional financing or kind of outside the box deal, the majority of those lenders have closed down. There are still a few out there, but it's more of a struggle in certain aspects of that. The government loans, FHA, VA, USDA, those have taken, a little bit more stricter requirements on board with their programs. For a while they were cutting back on the credit scores, and the limit of what they would allow. We can actually do down to a 620 again on our end. There's going to be some overlays like, you have to have 3 months reserves or have, the debt to income ratios need to be pretty strong, not too light, but we're just not going to the full max of what we used to be able to per their guideline changes. But for the most part, the biggest thing is just really because there's so much uncertainty with the job market itself is that we are having to do multiple verifications of employment to ensure that borrowers are still working up until the day of closing, as well as that there have not been any pay decreases, because we have found that a lot of people with their jobs have been any percentage of a pay decrease in order to keep going. So there's just certain things like that that are not normal that we are having to address and make sure that we stay on track with.
Yeah. I know we've noticed putting in contracts, whatnot, from contract to close. Has that changed for you? And what is the typical now timing for that?
On our end, everything is still the same as far as timing, still 30 days or less for a purchase closing. The only thing that I have noticed, and not a whole lot, is that appraisers might be taking a little bit longer, or some are a little bit kind of not doing the job for a while because, again, they don't know what they're really getting into by going into somebody's house.
Right.
We've been fortunate that our appraisers have stayed on track and stayed with a good time, but I have heard that has happened, throughout the industry.
Right, and we saw that ourselves on some of the listings we had, and then also with the buyers in the market. But fortunately, in the way that we're kind of able to stay on top of the process and have great people like yourself overseeing it, we were able to not get the delays in terms of it affecting the contract date or anything beyond the option period, that sort of thing. So that's good to know.
For the most part,
go ahead. No, go
I
ahead.
was going to say, for the most part, we're staying on track with everything.
Yeah.
You know, still actually closing early on some deals. It's just, you know, everybody, it's just a little bit different with everybody involved, from the title company to, you know, us to yourselves as the agents, just with kind of the social distancing aspect. But for the most part, it's kind of business as usual.
Yeah, and we've seen that as well. Taking precautions, you know, going into the listings as far as making sure everybody's, you know, doing the right things. There's a COVID disclosure that we've had people sign if they were a home inspector or an appraiser, you know, and so those things are being done properly. Tell us too about not just the purchase market, but, you know, we had a lot of people reaching out to us when this first came down, people being affected and then wanting to know if it was the right time to refinance. Can you speak a little bit to also the refi market right now and what may be out there for people if they're considering that as an option?
Yeah, definitely. So right now, the refinance market is booming big time, because prior to COVID-19, rates were at an all-time low, and they were expected to stay that way because there was nothing going on in our market to, you know, raise rates at all. Everything, there was nothing happening in the world, so to speak, to have any reason for them to increase until COVID came around. Rates are still extremely low. There's just little different factors into it. I have a lot of refinances going right now from clients that just closed even a year ago, because a year ago rates were a full point, if not more, higher. So it really makes sense to take a look at it. Again, I've been doing this for 17 years, so I tell everybody up front, you know, if I personally think it's a good benefit for them by asking the right questions or not, or if it doesn't make sense. I mean, if you have somebody that is, you know, they're only a quarter to half of a point higher in their interest rate than what the current market rates are, I honestly don't think that's cost effective for them to refinance. But if you're talking a point higher is what they have currently, then yeah, it should make sense to finance or refinance again. But there's a lot of things that involve, you know, as far as how long they plan on keeping the house, or staying in the house, as well as, you know, what the cost involved would be. Majority of people, it's making sense to do. We just have to, you know, make sure that the values are there and that it's going to be cost effective for the borrower, short term and long term.
Sure, absolutely. And we've had people, past clients, reach out, like you said, that even closed on a home maybe 14 months ago. So as long as they were in the home, you know, 12 months, they've reached that point, that would be someone too that could, if it made sense, like you said, look at doing a refinance, correct?
Yeah, definitely. A lot of it depends on, you know, the current value of the house and the amount that they owe. So, you know, majority of people, especially right now with everything going on, don't want to come into closing with a lot of money for closing costs and whatnot. So if we can, between the current loan and the appraised amount, if we can roll everything in, then, you know, we can, and it would save them money, as well as being able to keep them with as little out of pocket as possible to get into, you know, better payment, better rate.
Absolutely. And so one thing that Ellie and I always like to try to do, you know, to the benefit of our client, is look for, you know, what's out there that we can get for them on the contract itself. You know, can the seller contribute to their closing costs? Are any of those being impacted, or is that pretty much staying the same as far as, you know, seller contributions and those types of things?
I think that they're actually staying the same.
Okay.
As you know, every seller and property is going to be a different situation. So depending on what they need to get out of the house, you know, it's nothing has changed on that. If they're in a position to be able to do it and y'all are asking for it, I've still seen it, you know, happening. I haven't seen anything, you know, any restrictions on that, anybody cutting back on it.
Okay.
Majority of people selling right now still can, you know, because they've had it in their plan. It's not, I haven't seen anybody at that point just yet to where they have to sell due to losing their job or anything like that. I think that's, you know, too soon on that part. We might face that, you know, 6, 7, 8 months from now, possibly, once things start to kind of settle and people, you know, get back into the job market. But right now, it's just everything is staying as we're used to.
Okay, perfect. Well, I think the good news is too, even though we have seen, you know, some changes with the inventory, out there, you know, there's still sellers are still putting their homes on the market. A lot is being done virtually. You know, what we do right now in terms of virtual listings, virtual open houses, all those things that are done through MLS and HAR are out there for people. So I think it's encouraging too, just for buyers and sellers that, you know, may be watching this to say, look, it's not all doom and gloom. You can still put your home on the market. There's still people that want to go out there and buy a home. So, you know, just let's see what happens. There'll be more data, you know, coming out. We're going to share some things from April, how the market performs so that people can see that as well.
Yeah, definitely. It's still extremely busy. I mean, the Houston market as a whole has not, you know, come to a stop. It hasn't slowed down tremendously or anything. It's still actively going, you know, and we're kind of being double hit right now with the COVID and the oil. So, but our market is still strong.
Right.
Absolutely.
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 All right. With that, I'll kind of turn it to Ellie, to ask about.
So, again, you know, thanks for being available to speak with us and our clients. And if someone wants to reach out to you, what's the best way they can contact you?
Yeah, well, thank you first and foremost for having me. And definitely, I would love to be able to help any of your clients with purchase or refinance or answer any questions. The best way is going to be my cell phone, which is 832-541-1103, or by email, which is cody@cody.grizzoffi.com, and that's CODY-GRIZZOFFI.
Okay.
That's a long one, so probably the cell would be the best.
Yeah, we'll post that out there too. When we share this link, we'll put your email and phone and everything on there as well. So, hey man, great job.
The biggest thing is I'm sorry, I was just saying, I think the biggest thing for everybody is to realize it's, you know, while there is a lot of uncertainty in the world as a whole right now, it's not anything to stop the buying process. You know, it's if people have been planning for this obviously for a long time, then they still need to, you know, take a look and see what's out there, because rates are still historically low. The, you know, inventory is still pretty strong, and it's a great time.
Absolutely.
Absolutely.
Awesome, man. Well, we really appreciate it. Thanks for taking time with us today, and keep killing it out there.
Yes, thank you for having me.
All right,
you bet.
Take care.
You too.